For more on relations between China and Indonesia, we're joined by Dan McClory. He's the managing director of Bonwick Capital Partners. Dan, good to see you.
Good to see you, Michelle.
Dan, China's economy, as we know, is transitioning to a consumer-driven economy, and that has led to a decreased demand for commodities. Now, Indonesia was a big raw material supplier to China. So how is China's economic rebalancing now impacting the bilateral trade ties?
Well, let's call this an evolution, perhaps even a global evolution from commodities, which are currently out of favor, to downstream value-added products, which are very much in favor. We heard about some in the earlier part of the segment. That is redefining relations between a variety of countries, and no more so than in Southeast Asia and China and its relationships with perhaps half a dozen trading partners. We're definitely seeing this taking place in Indonesia today.
Well, Dan, as you say, Indonesia is making moves in this way. It says it's going to change its exports and foreign direct investment strategies to specifically cater to China. So are there any new policies in place, or is this still a work in progress?
Well, I think there are a number of policies in place. I mean, if we just start back to the establishment of the One Road, One Belt initiative, and some dismiss this as rhetoric. In fact, it's been backed up by the establishment of the Asia Infrastructure Investment Bank, which has launched projects and has had Mr. Xi traveling the globe, literally signing deals. And one of the projects that we heard about earlier in the show and has come to pass is the high-speed rail project happening right now in Indonesia. It's gotten a bit of the bad rap in the press, I think somewhat unfairly so, but this is a $5.5 billion project, the first ever high-speed rail in Southeast Asia, and China, in fact, beat out Japan for this very coveted contract.
Dan, let's talk about that high-speed railway link. As you say, it's a pretty big deal, $5.5 billion. President Jokowi was at the ceremonial groundbreaking. So what's the holdup? What's going on?
Well, you've got to consider Indonesia. I mean, looking at it as a country, first of all, this is a G20 nation. Okay, it's a $1 trillion economy. It's the largest economy, as was pointed out, in Southeast Asia. However, when you look at the global rankings of the easiest countries to do business in, it doesn't even crack the top 100. So I think China is somehow attempting to work within that system, eager as it is to get this project off the ground. Certainly it was announced with great fanfare, but there are matters such as approvals and permits that have to be established, local content laws in other cases. So we understand this project is absolutely underway and is absolutely about to happen, and perhaps it's been a bit overblown in the media.
All right, so tied up in bureaucracy over there, but the railway line, Dan, the Jakarta-Bandung link, it's China's first project of this nature in Southeast Asia. And some say that it's being viewed as a test for the One Belt, One Road strategy. It's been closely watched by countries like India, Malaysia, and Singapore because they're also considering Chinese high-speed rail. Dan, how significant is this project?
I think it's very significant. You make some excellent points, Michelle. This is 150 kilometers, again, the first ever high-speed rail project in Southeast Asia. And remember that it's in a particularly strategic country. Indonesia is going to require $400 billion of infrastructure investment in the next 5 years. This is a perfect example of how, if China can execute and implement, not only does it have massive opportunities right within Indonesia, but certainly throughout the greater region. I think China will be up to the challenge.
Well, you know, Dan, with China's economy rebalancing, some within Indonesia are saying that the country should consider joining the Trans-Pacific Partnership, the TPP, which China is not a part of, in order to be less reliant on China. Very quickly, what do you make of that move? Do you think that would be a good idea?
It sounds like a good idea, but there are a few flaws. Remember that a major industry, and this is again a value-added downstream industry in Indonesia, is the textile industry. And Indonesia happens to source the great majority of its raw materials, such as yarn, from China. And if China is not a member of TPP, then Indonesia will not benefit from the zero tariff regulations of TPP. So this alliance that right now is stretching all the way from Australia to Canada and everywhere in between will not benefit one of the largest industries that takes place right now in Indonesia, that is textiles.
All right, a very complex issue. Thanks for breaking it down for us. Dan McClory, Managing Director of Bonwick Capital Partners.